and you are live.
Orale. The only thing we're taking from Spanish radio is being late.
Oh,
Miguel, if you can hear me.
yeah, I can. You sound good. Sounds coming in good.
Okay. And yeah, given this new experience a try. It is 10 minutes after the hour of 1 o'clock here on April 18th. My name is Jared Uraine with the Five Diamond Group here at Vice Realty. And as you can see, we have a unique and different setup today for this episode 6 of the Move It podcast with me, Jared Uraine. And of course, this one-time setup is just for this week only because our buddy Mike is feeling a little under the weather. You should be able to hear him through the audio, though. And
Yeah.
actually, I take that back. You should see him on video, too, because I'm seeing it here on the feed.
Okay, good. Yeah, I threw you guys a curveball. So you're killing me, Smalls. What quote? What movie's that from, there, Jared?
That would
Smalls, you're
be
killing me.
my boy's favorite movie. And, well, that's one of the reasons why we have an English Mastiff.
Oh, really?
Yeah.
I did. Okay. I didn't realize that dog was exactly that. Okay. So remember in the movie, well, obviously, if your boy's favorite movie, remember when he's trying to learn to play catch with his stepfather, Bill slash Dad.
Right.
He approaches him. He says, "Dad, I mean Bill." And then on other occasions, he says, "Bill, I mean Dad."
Right.
So they go out in the yard and they're playing catch. And do you remember what Bill was constantly telling Scotty to do, the little boy?
No.
He said, "Keep your eye on the ball. The key to this game is keeping your eye on the ball." So they toss the ball back and forth, and it's pretty comical because the boy at one time, runs up and hands the ball to Bill slash Dad. And anyway, as they're playing catch or trying to play catch, eventually Bill throws the ball and hits Scotty right in the eye, giving him a black eye. It was pretty hilarious. They get him back into the house and he slaps a steak on the kid's eye and all that. And then at the end, he says, "You got to watch out for that curveball." So today, with the economy, we want to keep our eye on the ball. Hopefully, not give anybody a black eye in the process. So.
And what was the name of the movie for those that didn't hear it?
Oh, The Sandlot. I apologize.
Sandlot.
The Sandlot.
Yeah.
Yeah.
Classic, man. In fact, the boys had gone through the entire series of that one because there's at least three follow-up versions after that, the original, which is really fun. Neat.
Oh, I'll have to watch that. Yeah, that's pretty cool.
Keep your eye on the ball. All right, man. Let's get this show started. Today is April 18th. This is episode 6 of Move It with me, Jared Uraine, at the Five Diamond Group here at Vice Realty. Take it away, Lex. Give me a countdown. Welcome back to this episode 6 of Move It with the Five Diamond Group. And today Mike is feeling under the weather, so we allowed him to stay home, and we are working through all of the joys that come with this new technical challenge of incorporating Zoom in a live setting with my boy at home. That's awesome. Mike, you are live, which means we can hear you whenever you're there. And if you got something to say, just chime right in, my man. Okay?
Very good.
Right on. In today's episode, we are going to cover part 3 of a bit of Las Vegas history. And in this particular version, we are using and incorporating the hot topic of the moment, which is, of course, AI, automated intelligence. And the funny thing about AI is there's quite a bit of ruckus about as to how it's going to affect or influence the future. But most people are taking that in a sense that it has some sort of consciousness. But the truth about AI is it's just really a very good digger. It knows how to find all of the unique algorithms that have the highest rankings and provide you some of the best information out there. And it does have some intelligence behind it, but consciousness it absolutely lacks at the moment. So we're using AI in part of today's episode, and we'll see what kind of results we get in that under the neighborhood gems. We'll also cover a bit of the local market and national activity from real estate side, and then, of course, all of the economic conversations that are going to require us to keep our eye on the ball. To get us started, let's jump right into the neighborhood gems. From the dealers to the casino pit bosses, the house cleaning crew to the mob, even the world's best entertainers and the legendary showgirls all follow the ultra-rich and even the California escapees to call Las Vegas home. Join us in this part of the segment where we explore some of the city's history and identify the communities that made Las Vegas such a unique place to live. These are the neighborhood gems. To get us started, this portion of the episode is sponsored by, of course, the 5 Diamond Group Real Estate. Here, when it comes to selling or buying in today's fluctuating market, it is absolutely imperative to get the right information the first time. And we want to make sure that by getting you the information that you seek to help you in your family situation, it works for yours uniquely. And that is only done by way of a buyer's consultation. The consultation is designed to get all of your unique factors identified and also the wants and needs. And how do we fit that into today's marketplace? That's only done when we can do that face-to-face. It's not done over a 2-minute phone call. And that's something I need to impress on many of our viewers because some people feel that just connecting with a realtor is just a one-time call. Find me some homes and we move on. But the truth is, as everybody's situation is unique, every home is different, everybody's financial position is different. There are many variables that are behind the scenes, and it's absolutely imperative to make sure we see a full picture to help you make the best decision in your future. So give us a call today. You can reach out to us on our main line. You can search for us in Google under the Uraine Ordonez 5 Diamond Group, or you can reach out to the 5diamondgroup.vegas website. Let's move on. This part of the Las Vegas history is actually part 3 of a bit of the history. And now this entire portion was mostly created by AI because I have an outline and I have specific things that needed to be included. And I want to see what the results are on this. So this is going to be fun. Mike, if you got anything to chime in, man, just feel free.
Yeah, I was wondering, when you say AI, are you talking about chat box and all that kind of stuff?
Yeah, absolutely.
Oh, wow. Okay, so that should be interesting, yeah. I've heard a lot of dynamics in all kinds of directions. The CEO of Google said that particular technology is, say again? Yeah, I can hear you. Oh no, I hear you. Did we lose audio?
How about now? Can you hear me?
Oh yeah, you sound yeah. But
so Mike, just go ahead and hold tight while Lex figures this out. I'll go ahead and read through this portion of it. So,
okay.
When it comes to Las Vegas, it's a city that needs no introduction. Famous for its larger-than-life entertainment and non-stop nightlife, today we embark in a journey through the city's Las Vegas pop culture between the years of 45 and 95. A time that saw the city rise as a global entertainment capital. In the late 40s, Las Vegas was really just a small desert town, but it was on the brink of a cultural revolution. It was during this period that the city started to become known as the entertainment capital of the world. Las Vegas was the destination for some of the biggest celebrities who came to perform in the city's nightclubs and casinos. In the years following the end of World War II, Las Vegas emerged as a hotspot for entertainment and gambling. The post-war economic boom, combined with Nevada's liberal laws regarding gambling, made Las Vegas an attractive destination for tourists from all over the world. The construction of the first modern hotel casino, the Flamingo, by mobster Bugsy Siegel in 1946, that signaled the start of an era of rapid development of the city's landscape. Siegel's vision for the Flamingo was to create a luxurious destination that catered to the wealthy and the glamorous, and it set the standard for future hotel casinos to follow. In the 50s, it saw the construction of several iconic buildings that would become synonymous with Las Vegas. The Sahara Hotel and Casino, which opened in 1952, that was the first hotel casino to feature a swimming pool, and it quickly became a favorite among Hollywood celebrities. In 55, the Riviera opened, and it was featured as the first high-rise on the Strip, with 9 stories. 9, figure that. The Riviera was also the first hotel casino to have a state-of-the-art convention center, which helped make Las Vegas a destination for business travelers. During the 50s, Las Vegas continued to grow, and the city's pop culture continued to flourish. This was the era of the Rat Pack, a group of popular entertainers that include Frank Sinatra, Dean Martin, Sammy Davis Jr., Joey Bishop, and Peter Lawford. The Rat Pack became the embodiment of pop culture in Las Vegas during this time, and they performed at the Sands Casino and Hotel, which was also considered the epicenter of pop culture. The Rat Pack's residency at the Sands was the epitome of cool and sophistication. The Sands was also the first hotel casino to feature a world-class venue called the Copa Room. It was identified as home central for many of those acts of the era. The Tropicana also opened in '57, which was famous for its iconic sign, and it featured its all-star shows, things like Liberace and the Folies Bergère. In 1960, the Beatles influenced the world, and as well as Las Vegas. They quickly embraced the British invasion. The city's nightclubs and casino hosted some of the biggest names in music, including Elvis Presley, Beatles, and the Liberace. The Liberace. That's funny. That came out naturally. Didn't mean it that way. But Liberace. For those who don't know Liberace, you need to look him up, by the way. They took his museum down. The Strip became known for its flashy neon lights, and it was during this era that the city's pop culture started to take on a new form. The political landscape of Las Vegas also had a significant influence on the growth. In the 50s and 60s, the city was controlled mostly by organized crime, and the mobsters who ran the hotels and casinos, they wielded significant political power. However, in the 1970s, the federal government began a crackdown on organized crime, and this led to the ousting of many mobsters from the city's casinos. The rise of corporate ownership of the hotels and casinos also changed the city's landscape, with large corporations investing in the city's development. In the 1970s, Las Vegas continued to grow, and the city's pop culture evolved once again. This was the era of the showgirls, who became an iconic symbol of the city's pop culture. The Stardust Hotel and Casino featured a nightly review called Lido de Paris, which featured a cast of beautiful showgirls who performed in elaborate costumes. The 70s and 80s were also characterized by the rise of mega resorts on the Strip. The MGM Grand, which opened in '73, was the largest hotel in the world at the time, with over 2,000 rooms. The Hotel Casino was also the first to feature a theme park with rides and attractions for the whole family. The Mirage opened in 1989, and that was the first mega resort to feature a volcano that erupted every hour, and it was also home of Siegfried and Roy's legendary White Tiger show. The 1980s saw the rise of Michael Jackson, and Las Vegas was quick to embrace the king of pop. Jackson performed at MGM Grand Hotel and Casino, and his concerts were some of the most popular shows in the city's history. The city's pop culture continued to evolve, and nightclubs and casinos continued to attract some of the biggest names in entertainment. In 1990, or in the 90s, Las Vegas evolved and what became the epicenter for the famous Celine Dion. She has been one of the most iconic performers in history for Las Vegas. She recently discontinued her performance at Caesars, right? Over the years, Las Vegas has taken on significant changes between the years of 45 and 95, very formative years into the modern city that we know it as today. Part 4 of, or I should say the next episode of our Neighborhood Gems are going to include kind of what has curtailed or what has the city developed into over the last decade or two, specifically in regards to it being formed as a world-class city and how it endured the Great Recession of 2010. That does it for this episode of the Neighborhood Gems, and I want to thank you for tuning in for that, which moves us into our current market update. Lex, take it away.
Well, 15.
All right. Miguel, you still there with me?
Yeah, I am. Can I jump back to your history of Las Vegas a little bit?
Shoot.
The Flamingo Hotel, when Bugsy Siegel wanted to open it up, he wanted to have live flamingos in the water out front. And can you guess how many days that lasted?
In the Las Vegas heat?
Yeah, in the Las Vegas desert. Yeah, those flamingos lasted one day.
Yeah,
So then he decided he can't do live flamingos. But the one thing about the Sahara Hotel where the Rat Pack used to go, something that's kind of an event here in Las Vegas that a lot of people know about, is the Sahara Hotel. They at the time didn't serve people of color, and part of the Rat Pack was Sammy Davis Jr. And but Frank Sinatra told them that they either serve Sammy Davis Jr. or they don't perform there.
Yeah, that's one of the coolest things about Frank, is that he didn't play by the norms, man.
Yeah, and there were a few other things. Oh, one last thing: the volcano that used to go off every hour, when that went off, the casino was charged $5,000 per occurrence because of pollution violations. But they just considered that the cost of doing business.
Right.
For the Mirage. Yeah.
Right.
Just a couple of tiny little tidbits.
Just a little bit. Yeah, man. So we're seeing some funky trends happen here in the real estate market, with nationally as well as locally. Jobs report came out last week, and that was fascinating expectation. What you got there, Mike?
Well, the jobs report were a little bit higher than anticipated, but that's okay. And unemployment, it didn't affect unemployment. Unemployment is still at 3.5, 3.6. A couple of reports that came out last week. Remember our last broadcast, we were talking about headline inflation and core inflation.
Mm-hmm.
Well, if you tuned in last week, you saw that we anticipated headline inflation to come in at 5.2. It beat expectations, coming in at 5.0, but that's because the cost of fuel had taken a dip. But the headline inflation, if you watched last week, we said would come in at 5.6, 5.7, and that's exactly where it came in at, was at 5.6. And that's keeping your eye on the ball, because that's where the Federal Reserve is focused, is core inflation at 5.6. That's what's motivating them to keep hiking the Fed rate. And so, unfortunately, the core inflation did not move the way that the market was hoping. So there's a 67% chance priced into the bond market that the Federal Reserve is again going to bump the rate by 25 basis points come May 2nd, which of course will impact the mortgage landscape.
Right, and so the effect that translates into for mortgages and people interested in buying homes is that if that rate goes up, then obviously there's probably going to be some. Add that to a national shortage of inventory. We did have here locally 4.2 months of inventory in December, and we are now at 1.8 4 months later. Just how quickly that can dry up, even with everything that's happening right now. And so, as I mentioned last week, and we're starting to see kind of this develop, we're getting back to the space where we were in 2021, where a shortage of inventory is going to create increased prices, mainly because you'll have a certain set of buyers who are buying at the moment, and they are trying to compete against each other. And I'll give you one example. This is actually happening as of today, over the last week and a half, 2 weeks, in the lower price point. For anything that's under $425, which is our median price point, is seeing a lot more activity. Those are the entry level price points for many folks, and many folks are teaming up with family members, getting 2 or 3 people to apply and get on a loan so that they can purchase a home together. But now, with inventory being shorter than it is, we're seeing multiple offers, 2, 3, 4 offers. In fact, just called on one yesterday that I figured the price point was going to be about $20,000 off. Came in, they've got 4 offers at list price, and it's interesting to see, because now that $425 median price point, we're going to start seeing it probably creep up, start going back to appreciation. Completely opposite of what many people are expecting, or were expecting, as far as a crash goes here.
Yeah. Well, no, there's not going to be a real estate market crash. However, it's still going to be well. There's as we talked about last week, there's a credit crunch right now with the banks, especially after the crisis, et cetera, the banking crisis, and right now it's getting harder and harder to go ahead and qualify for a mortgage. So a person's individual circumstances all of a sudden become more and more critical. Banks right now, according to the Mortgage Brokers Association, mortgage brokers are losing $301 alone right now. They're actually losing money, which is the first time that has happened since 2009. And the cost for the Mortgage Brokers Association on average to do a loan is $10,600 as opposed to $8,600. So it's getting tougher for mortgage brokers and the banks to actually qualify people for loans. That's why credit's tightening. So it does make the lower price points more attractive, I guess.
Sure. And so with the shortening of, with the tightening of inventory, with the situation where we're going to probably see multiple offer scenarios for many buyers today, it is even more imperative for folks not only to work with the experienced brokers and agents who can navigate this time period, but also to get you the best options when it comes to buyers purchasing in today's market. Many of them might need contributions from the seller, and others might be able to get some sort of grants and loans as a part of their purchase program. Many of those programs help buyers get into a home, but if you're competing, it doesn't help you in that negotiation scenario as strongly. And so being able to do both of those is even a stronger asset when it comes to finding the right realtor. And I can tell you from our track record in 2021, probably the hardest year for buyers when it came to buying. A good 80% of our clients all were still able to get sellers' contributions or equity into their home. And I think the only two people that intended not to do that were part of our team who chose to actually put money over in their purchase. So when it came to being able to get experienced buyers in the in a challenging marketplace, you certainly want to be able to interview the right people that are in there. As far as go ahead.
You need you want a qualified realtor, but that realtor, you want to make sure your realtor has a team of persons he works with. He has to have skilled, qualified mortgage people, appraisal people, escrow people, title people. He has to have, on average, the average real estate transaction takes about 35 persons that are involved. When you consider inspectors, buyers, sellers, etc., all parties involved, representing all sides. There's about 35 persons involved, and everything has to go just right to close a real estate transaction. So when you're picking out your realtor, you got to have an individual who has a team of persons that he works with that he's confident in know how to do their job. Because sadly enough, many people out there in the professional world, they do a mediocre job, and that's the results you get. So.
Amen to that. Yeah. One of the other programs that are out there too, for some of the lenders, and again, back to who you work with matters. The lenders who are offering these loan programs to buyers can also contribute, in a sense, to the value of a buyer's ability to purchase. There are certain lenders that do offer same as cash loan programs, which basically, on paper, allow the buyer to purchase with what looks like cash only. And that just becomes an added value for the buyer to be able to negotiate to the seller in a competitive environment. When it comes to loan programs that look like cash, it really is kind of a two transaction scenario where the buyer is qualified with the lender and the lender is fronting the money, and then they perform the transaction according to the way the contract is written and executed. So there's really unique ways to be able to make a transaction happen in today's marketplace, as Mike said, and as we know, the reports are saying credit tightening is going to happen, which means you absolutely need to be more polished in your credit. And it's going to be really important to make sure that you not only have the best credit possible, but you have also as much positive information on paper to help your buying scenario. So if that includes getting someone to co-sign with you or to buy with you, those are certainly options to start thinking about how to make that happen for you in that marketplace.
Right, and it's going to get a little bit more difficult as moving forward, because the economy moving forward, there's some gray clouds on the horizon, And when you look at the global economy, the IMF last week said that if we have this sustained inflation rate, it's going to cause crisis type events in different economies around the globe. And so, as much as the globe is divided, we're still one planet. And what happens, in other parts of the world actually affects us right here in Las Vegas, And so it's important to have somebody who can discern what's happening in the market and be able to utilize what tools are there to, take care of you. Otherwise, you're dealing with somebody who doesn't understand the importance of qualifying their buyers or making sure that the house is appraised at the right value, all those things. It's getting more complicated, unfortunately. So
there are two things that are on the horizon, Mike, that we're going to pay attention to, and I know that you definitely got your ear on the streets with. The first one being the banking situation, the great banking crisis. We know that there hasn't been any activity happening on that in the last few weeks, which is good news. But the trend is mid-cap banks are, I should say the giant banks are actually attracting a lot more depositors in that arena.
Right. The earnings came out for a few of the largest banks last Friday, and J.P. Morgan and Wells Fargo and Citigroup all exceeded earnings by quite a bit. J.P. Morgan brought in $50 billion billion dollars worth of new deposits that came from the mid to small cap banks. They ran from the mid cap banks and to the large cap banks, and profits went up, and J.P. Morgan went up 7.5% that day on Friday, and banks, though, as a whole, are right now, they're borrowing less from the Federal Reserve. The banks that are gaining deposits are using those deposits as a backstop, as assets to protect them in the event of a more difficult economy in the future, greater defaults. So they're bringing in more cash than they're lending out. As a matter of fact, 2023 will be the first year since 2009 that the banking system and the Federal Reserve are going to net purchase mortgages. They're going to net purchase fewer mortgages than they have since 2009. In other words, they're going to issue more mortgages than they are going to purchase, because it's just not attractive to purchase mortgages, especially if they were at a lower interest rate. So that's the first time that's happened since 2009. So the banking crisis that happened, it seems as though there's not going to be a major catastrophe following that, but it sure does have a residual effect. And the next shoe to drop looks like it's going to be commercial loans, or the commercial real estate market does not look good.
Right.
So, and that'll obviously impact the residential real estate market. So,
obviously,
right.
And so, with keeping an eye on the ball, first being the potential, what happens? What are the banks going to do when they adjust? If the Fed raises the rate, how does that impact? We saw the impact of the Fed raising the rate pretty quickly last year, translating into the turnover of SVB and about 3 other banks that were in the market, right?
Well, probably what you're going to see is a lot of mergers and acquisitions between these smaller banks. They're going to combine themselves. Of course, a lot of that depends on compensation to the executive officers of different banks, because that's the world we live in. But for example, most recently we saw Charles Schwab purchase TD Ameritrade. Charles Schwab is also a banking institution, not just an investing institution. And so you're going to see a lot of these banks come together It is going to get more difficult for the commercial market, and you'll find a lot of real estate loans are going to be a little harder to get. They're just going to be harder to get, and the banks, as I said before, they're bringing in more deposits than they're issuing in loans because they're trying to shore up their assets in the event of credit deterioration, because fewer people are saving money these days. And as a matter of fact, people in their 30s have debt of an average of $6,700. That's a lot of money in debt. Credit card debt at that. So when you have that much credit card debt, you're looking at, somewhere between $200 and $220 in interest alone. So we're moving into some difficult times a little bit economically, probably more so in the fourth quarter, but we need to start preparing right now. As a matter of fact, somebody asked last week, how can you hedge against inflation? And obviously we said not to go into debt, which is, and it's funny that report about those in their 30s have increased their debt more than any other generation on record. But another thing you can do is you can invest in savings bonds. And if you get it done before May, you can lock in at 6.68%. And all you need is $25 to get into that. Another thing you can do is
Full disclosure, we're not licensed advisors. And in no way are we telling you to do that or encouraging you to do that. And of course, everything comes with risks. But you have some really good points there where, in fact, one of the questions that we have from Rodrigo Rivera is, do you think jumping into dividend yields is a good idea?
No, I think right now, because we see a storm a coming, right? That's when you save money. And if you're going to save money in high yield savings accounts. And you can do that online where the costs are going to be lower. Additionally, you can do CDs. Now, a CD is going to pay more than a high yield savings. However, your money's going to be locked up, for a term, 6 months or 12 months. And that might be a good application for an individual because that would prevent them from taking the money out early, right? So you could have a high yield savings account. On top of that, you can have high yield CDs, and you can have multiple CDs. They call it a ladder of CDs. In other words, you can have a 6-month CD, a 12-month CD, an 18-month CD, and that way you have access to your money in increments. But by doing all of these things, you're preparing yourself for the inflationary pressures that we're facing now, and it looks like we're going to be facing for some time to come. And you're preparing yourself for a possible recession. Well, I say possible, but a likely recession. How's that? Mm-hmm. And it's the way to illustrate it is if you have a health problem coming up and you need to save money to prepare for that time off from work, etc., because you have to deal with that health problem. It's good to save money ahead of time. Don't wait until the situation's upon you. So you want to put money away in high yield savings accounts and CDs, and the savings bonds. If you get in there before May, it's still paying 6.68%, and you'll be locked in for 6 months.
Yes, sir. Yes, sir. So the two things we're keeping our eyes on the ball. Of course, the economic issues and pressures and challenges that are forthcoming, and how it, secondly, impacts us locally and in the real estate market. So we will continue keeping our eye on the ball. Mike, thank you so much for joining me today, man. Your insights are always timeless. Just to answer a question that we did get in the chat, and to recap what we covered, I think your background. What's your background, real quick, Mike, for our listeners?
Well, I previously worked at J.P. Morgan Chase. I was in wealth management for a short period of time. And prior to that, I was the owner and founder of eMortgage here in Las Vegas. Prior to that, I was the founder of North Star Insurance Investment. So I've done group health insurance. I've done quite a volume of mortgages. And then after that, I was a banker in wealth management at J.P. Morgan.
Thank you, sir.
Yeah.
It's always fun to talk shop with you, man. Somebody who can,
Yeah.
someone that I have to keep up with. All right. Well, Mike, I want to thank you so much, even though you are under the weather and stuck at home. I want to thank you so much for taking the time to be able to tune in with us and join us, man. We might be doing this more frequently in the coming weeks if I've got a trip to go on, which I do have scheduled. So keep your tools available.
Will do.
Cool. That does it for
sounds
the economic portion. I'd like to be able to move into the last part, which is going to be our final thoughts. The recap of today's episode is really just some key takeaways for us, our users, as well as for us as in everyday life. Charlie Munger, if you don't know who he is, he's the second half of Berkshire Hathaway, or Warren Buffett's business partner, has what we call Munger's models, and many of those are things that he's talked about as far as business and being able to understand different business cycles at work. But his key points on being prepared for this current cycle is pretty fundamental stuff. Things that we just covered in this particular episode. Things like being able to improve your credit score, make sure you build up your savings account, and get yourself into a financial position that is advantageous for you. So if you need to buy at this time, and you're looking to purchase, whether it's real estate or something much bigger than that, talk to counsel, talk to advisors, people who know this part of the industry, who know how to navigate it. This isn't just for the fair weather friend or agent that had just recently got their license. You want to make sure that you understand all of the options that are available to you, because it could be a costly mistake in today's market. And what I mean by that is if you were to just take advice from someone on the streets or family and friends who don't understand what's actually happening right now, many people have chosen to wait in today's marketplace to purchase. And anybody who told me 4 or 5 years ago, I'm going to wait for the market to crash, I'm going to wait for the market to crash, I'm going to wait for the market to crash, well, they are case in point reasons why you shouldn't have waited. If you would have bought in at those points in time, then today you would actually be in a better position financially, because you would probably have a better mortgage that's probably better than what's currently rented, a better rate that would be locked in for 30 years. And most likely you would have equity in the home that you had purchased at that time. So when it comes to listening to the experts and taking the counsel, we just want to encourage you to be able to do the right thing. If you need a checklist of things that would work, we have a resource available called the Credit Repair Checklist. It's available to you for free by reaching out to us on 5diamondgroup.vegas. I want to thank you so much for tuning in on this episode 6 of Move It with the 5 Diamond Group here at Vice Realty. My name is Jared Uraine with the 5 Diamond Group broker salesperson. I've got Michael Francis, my buddy, online, and he's going to join us probably in the next couple of weeks as well as we encounter the upcoming episodes. If you'd like this information, please make sure to save it on YouTube, hit the subscription button, or even share it with your friends so you know exactly who your circle of friends are about. Again, I want to thank you for joining us in this episode. I hope you tune in next week. Make it a wonderful day.